All right, I want to go through the sales process that I use with each and every call, every time with Crowdfund My Deal. To start with, the few overriding concepts is we are looking for as many yes answers from the client as possible. My goal is always to get somebody to say yes 6 times. That actually builds some positivity and more likelihood that they will ultimately say yes when you ask them to buy. The reality is that this is not a hard close type of sales process. The biggest thing that you can do to ensure that you're not only building the relationship, but you're able to move the prospect through the sales process to get them to sign the purchase or the platform listing agreement is to really get to know their background, their goals, their business, their dreams. We want to focus on their dreams and how we can help them reach that part. That's this building the connection, which should be 1 to 2 minutes to really build the connection, another 2 to 4 minutes of really getting to know their background and their goals. That is really a time saver because it helps you also know how to respond to the same questions that we're going to get every time. And then the final answer is it okay if I explain a little bit more? Answer is always yes, because you've built the connection. Now, I want to set the stage for you so that you understand that we got your information because you recently filed for a Reg D 506C. Of course, that means that you can only accept these high net worth investors. And I'm wondering if you would be interested in expanding your investor base, going from that top 10% of the high net worth of America to accepting the other 90%. We're talking about expanding your potential investor base by over 300 million people. Does this make sense to you? May I explain the strategy? Because frankly, not a lot of people have even heard about this. But what I'm talking about is regulation crowdfunding. It's technically regulation CF. Have you ever heard about this before? Great. If they say yes, well, let me just explain a little bit more, make sure that we're on the same page, because it's a different animal than Regulation D. With Regulation D, you are limited to those verified, accredited investors, as you know. With regulation crowdfunding, you have to place your investment through a FINRA registered crowdfunding portal. That's what Crowdfund My Deal is, and this is the service that we provide. What this allows you to do is to accept accredited and non-accredited investors so that you're able to accept everybody in America as an investor. Does expanding your investor base still make sense? Answer is always yes. Now, you already have your Reg D moving forward, and I want to explain to you how our very unique side-by-side investment strategy works. Would it be okay if I get a little deeper into how this is set up, where now you can accept up to $5 million of non-accredited money and an unlimited amount of accredited money? Answer is always yes. So to explain how the side-by-side concept works, and we are the only platform in America that is really allowing and talking about this strategy. But you currently have your Reg D, and I'm not trying to change that. But side by side, we launched this Regulation CF offering that allows you to accept everyone. Now you're capped at $5 million in crowdfunding investments per year. It's unlimited with the Reg D, as you know. But here's the way we set it up. We have this landing page. Landing page has one overriding question: are you accredited? If somebody clicks on yes, they go down the route of seeing your Reg D investment. If they click no, they go down the route of seeing the regulation crowdfunding investment. Don't worry about it. I'd love to send you a specimen so you really see the mechanics of how that works. But does this make sense to you? And would you like to learn more? If the answer is yes, we're going to move on to the questions that they have. If they say no, no always means one thing. You haven't given them enough information or enough value for them to say yes. If they say no, continue to speak on the benefits of the side-by-side strategy. If they start to have issues with, well, this is going to cost this much, we've already got a funding portal, that's where we get into, sometimes in advance of asking the questions, answering them. But we always get the same questions. I was told no non-accredited investors by my attorney. Well, that is absolutely 100% correct for this Regulation D 506C offering that you've already launched. What we're talking about here is a completely different animal entirely. This is not a Reg D. This is crowdfunding that allows you to accept everybody. So while your attorney is correct for what he sets you up with, he may not have the knowledge or experience to know about these other directions that you can take. They may bring up, I've always heard that non-accredited investors, they're a pain to deal with. And you know what? I agree with you. I agree with you from the context of a Regulation D investment. With Regulation D, you got these minimum investments of 50,000 or 100,000. And for the non-accredited investors, that's a huge percentage of their net worth. They are afraid. And so if they're not getting their distributions that they expect, if they're worried about the project, if they're not getting information, they're blowing up your phone. And they're asking what's going on and what's happening, and they're scared. For those people, yes, those non-accredited investors are absolutely a pain. However, with this regulation crowdfunding, they're limited on how much they're able to contribute. I always use the same example of if you're dealing with a retiree, somebody that has no income, but has a net worth of at least $124,000. They can invest up to 5% of generally it's their net worth. So in this case, if somebody has a $500,000 net worth, they can still invest up to $25,000, but they can't invest more than that. Now, if they have a household income of more than $124,000 and a net worth more than the same, then it's up to 10%. Of the higher those numbers, generally it's their net worth. Same example, if somebody has a reasonable job, making more than $124,000, plus they have a $500,000 net worth, now they can still invest up to that $50,000. However, they're not allowed to invest more than that. Because now we're limiting how much somebody can invest, it relieves a lot of that fear. So a lot of that classic don't work with non-accredited investors no longer applies. Let me explain to you how the investment process works. So if you haven't or haven't been working with an investor portal, it's really there to simplify and streamline your administrative process of delivering to the investors the paperwork, the PPM, the disclosure information, but also all of the investments happen through the portal itself as well. You can do this for your Reg D. If you're not already, you should be, and you should be thinking about it. But it is absolutely required with the regulation crowdfunding that you have to use one of these investor portals. Very specifically, a FINRA registered crowdfunding portal, of which there's only about 80 of them in all of America. Some of the larger ones is like Start Engine or WeFund or Republic. A lot of people have heard of them before, but we're actually taking a different spin and approach. For most of these crowdfunding platforms, there is a crowdfunding marketplace, and they're charging anywhere from 7 to 9% of the capital that comes in. They're spending their money on driving traffic to their crowdfunding marketplace. They're still expecting you to be doing some advertising and marketing of your deal as well. However, any investor that you're bringing to the table is seeing every single deal that's on the crowdfunding marketplace. You're literally bringing investors to other people's investments. As well as the Start Engine, their crowdfunding marketplace marketing. It's not for your deal. It's to bring prospective investors to see all of the investments. Maybe you get some capital out of it, but you're paying these fees on all of the capital. We've taken a completely different approach. I call our FINRA registered portal a compliance portal. We don't have any marketing that is provided. You do 100% of the marketing. However, we charge far less, only 2% of capital. So really saving you money, and at the same time, you're able to start accepting investors that you've never and would never be able to work with or accept not undertaking this strategy. If they bring up that they're already working with some investor portal, 100% of the time, that investment portal is Avestor, Juniper Square. It's one of these non-FINRA registered portals, of which I explain phenomenal. I'm glad you already know and understand the benefits of these portals. However, with the one that you're on, you can't do this FINRA crowdfunding offering. You have to have these specific registrations that, frankly, most of these platforms do not have. That's where we come to the table, but we actually don't need to have all of your offering in our platform. You can still use your investment portal with your Reg D investment, but you can have your regulation crowdfunding on our own platform. As I was explaining with the landing page that goes down the Reg D or the Reg CF routes for the investors, no problem. They click on their accredited, they go see your Reg D investment on any platform that's out there. If they click no, they're not accredited, then they have to go onto a platform like Crowdfund My Deal or other FINRA registered portals. So no problem with having your own platform. At the same time, once you're done with your crowdfunding offering, you can actually bring all those investors over to your current platform, so you're still able to manage them all in one place. No, you don't have to have the Crowdfund My Deal platform forever, but it is required during the time frame that you are raising capital. They're always asking about the cost, and I don't want you to worry too much about it. I'm going to email to you the information about the cost. At a very high level, we do charge $250 for the first offering, $50 for each additional offering, like if we're doing the side-by-side, as a technology fee. That's a monthly fee to be on the platform. Then we charge a 2% compliance fee for any of the capital that goes through the regulation CF offering. We don't charge anything else on what goes through the Reg D offering. There are some credit card fees and other wire fees that may be passed through to you, but they're just reimbursements. They're not additional fees that we charge. From the legal side, we do have a special deal set up with crowdfunding lawyers. I say that with you can work with any attorney that you like. I know you already have a securities attorney. No problem there. If we're adding on a Reg CF to your current offering, it just costs $5,000 in legal fees for them to put together the disclosure document. There's financial statement requirements. If you're raising more than $1,235,000, you have to have audited financials. As long as you have a new entity, it's really not a huge cost. We get them done for $1,500. We literally look for the cheapest auditor available. If you're raising less than that $1.2 million, you still have to have reviewed financials. Our auditor still charges $750 for that. However, there is not any need to go with the Deloittes of the world. We're just trying to check a box. And really, between the accounting, the Crowdfund My Deal platform expenses, and legal expenses, that's all it takes for you to start expanding your investor base to all of America. But like I said, don't worry about it. I'll send you some more information, really line iteming these costs. In terms of time frame, our goal is for you to be raising capital through your Reg CF in a month. That absolutely requires you to be responsive. Questions are going to come up. Due diligence and background information is needed. And it can move forward in an expedited fashion, but it does require you to participate, to respond, to sign on background search requests, to open up the escrow accounts as soon as possible so we can hit that timeline for you to start raising capital from everybody. If somebody asks about how many deals we've done, I always explain that we are a newer portal. We're taking an approach that frankly no other portals out there are taking in terms of we just provide compliance. In terms of our compliance, we're working with securities attorneys that are partners, are also partners at Crowdfunding Lawyers. That is one of the largest law firms in America that helps develop, launch, and with compliance with these types of investments. So we just got registered in December. We've had, 3 or 4 different deals that have gone through the process with us. I don't deny that we're a newer platform, but we have the compliance experience. And then on the technology side, we're leveraging, and I'll share, it's CrowdEngine, which is one of the biggest software developers in the space. A lot of the crowdfunding portals use this software as their back end. That's exactly what we do as well. So even though we're a newer portal, the experience behind the technology and the experience behind the compliance is second to none. And when it comes to the marketing side, that's all on your side anyways. They always ask if we're bringing investors, and I explain, no. We do not bring investors, the marketing for investors. That's your obligation. We don't charge the same as the crowdfunding marketplaces that do look for investors, but that's the reason why we cost 75% or less than these competing crowdfunding platforms. So you do need to do your own marketing, and those come from 3 different channels. We're happy to make introductions to various marketing agencies. We work with some of the largest marketing agencies in the crowdfunding equity space. Don't care who you work with, we make those introductions. If you want to do the marketing yourself, we do have resources that we can send you templates and investor CRMs and ways for you to help get started as a DIY approach. And the third approach is you can hire a consultant to get the education, the support, and the direction where you're doing the heavy lifting, but you're doing the heavy lifting with some knowledgeable, experienced consultants along the same lines. At the end of the day, we don't care which direction you take, but our goal is to make the introductions so that you can be successful in your capital raise. What makes us different from the start engines or WeFunders of the world? Well, they do have their crowdfunding marketplaces. Like I was saying, all the investment projects are on this one marketplace that They are driving some traffic too, but they're still expecting you to do marketing for your investment as well. However, your investment is shared with all of the other investors. And so you're really just trying to help them build their business. With our funding marketplace, we don't share your investors with anybody else. We don't share anybody else's investors with you. However, your investors that you bring to the table for your investment, they're yours. If you want the data and the information about who has visited your investment and who's looked at your opportunity, that's yours. We'll share that with you. We just don't share potential investors that looked at anybody else's projects, just like we're not going to share their information with you either. But for this, again, we charge 75 to 80% less than the start engines, and that's what gives you the spread and the ability to afford the marketing to move forward. What are the benefits of our portal? Our portal is just like so many of the other investor portals that are out there in the world that hosts your investment, processes your investment, makes your administrative easier, sending out the tax information, financial information, performance reports. All of that can happen through the portal, and it makes your life so much easier to have one source where you can send out the information. But ultimately, the biggest benefit of it is to allow you to accept the other 90%, everybody in America as an investor, which you cannot in your current format of only doing a Reg D investment. I will say this, we're the only portal that is offering this side-by-side type strategy. The reason being, these other portals like Start Engine or WeFunder, they want to make sure that they're making money on all the capital that you bring in. We are only doing compliance on your Reg CF offering. We're only actively involved in overseeing your Reg CF offering. We only expect to get paid on your crowdfunding offering. We don't need to charge you fees. We're not actively overseeing anything of your Reg D investment. And that's really what allows us to stand out compared to the competition. The issue always comes down to capital or not capital, or how many people are successful with this. And 100% of the time, it always comes down to marketing, marketing, marketing. We're asked all the time what percentage of these investment opportunities are successful, and I don't have a good answer for you other than the investment sponsors and promoters that market more have a higher chance of success. If you're trying to DIY, do all the marketing yourself, that is the highest likelihood of failure. Now, if you have a consultant that is guiding you, the chance for success increases. If you're hiring a marketing agency, your chance of success increases that much more. I won't pretend like it's a guaranteed funding, but our goal is to help put you in a position to maximize your opportunity of success. And that often takes just introductions to these various vendors. Again, we don't care who you work with. We just want to connect you with vendors, groups, and agencies that we know are successful in the equity raising space. Would it be okay if I send you a little bit more information, a breakdown of the cost, some samples and specimens of what the investment opportunities online through the portal actually look like? Their answer is always yes. And I thank you so very much for your time today. I really appreciate it. We will be following up with you. Definitely hope to work with you sooner than later. I do note that the biggest expense can be the audited financials. So if you do plan to take this approach, you need to move sooner than later, because that's a way to minimize your cost of being able to pursue this type of investment strategy. Thank you again. I look forward to catching up soon.